The stock market tanked this week, but it wasn't because of war, a Fed meeting, or some random news. It came down to one thing and almost nobody's talking about it. It was a bond auction that went very badly, and when this happens, it sends shockwaves throughout the entire system. On Wednesday, the US Treasury tried to sell $16 billion in 20-year bonds, but the demand was just not there. Investors weren't interested in the rates offered and demanded much more interest to take on the debt. When yields spike, everything from mortgages to corporate loans instantly become more expensive. It wasn't about earnings, it wasn't about headlines, it was a fundamental shock to the cost of money itself. As rates rose, assets like the Dow, S&P 500, and NASDAQ started tanking. Here's why this matters more than ever. US Treasuries are the foundation for global capital, and every other asset gets priced off their base. So when baseline yields jump, capital rotates. Suddenly, 5% in US bonds with no risk start to look much better than overvalued stocks with a ton of debt exposure. But here's what the media won't tell you. While TradFi was bleeding out, Bitcoin broke into new all-time highs. Because smart money is realizing the system is broken. And crypto, especially Bitcoin, is your hedge against the dysfunction. If you're still holding broad market ETFs or companies that are riddled with long-term debt and you have zero crypto exposure, you're playing defense, not offense. This is the exact time to be rotating into high growth sectors with real trends, and crypto should absolutely be 15 to 20% of your portfolio allocation. If you want to see where I'm rotating capital right now in crypto and beyond, just comment SBS below and I'll DM you a full breakdown.